All right, welcome to the Daily Rip Live. I'm Katy Perry here, as always, with Shay, Boloor, and our super special guest, Dr. Eric Jackson, founder, president, portfolio manager at EMJ Capital, big time Drake stan, and of course, Opendoor Bull. Eric, welcome to the show. It's awesome to have you with us this morning.
Great to be with you guys.
And I assume you're dialing in from Toronto.
Of course, yeah. I'm not a stone's throw away, but like a dog walk away from Drake's house right
Yeah,
now.
you're close. I'm from northern New York, so I feel like I'm Canadian adjacent. Well, it's
Western New York or where?
West, yeah, Syracuse.
All right, well,
Close.
yeah,
It's
that's kind of
basic.
like the middle.
I know. I identify
The
more the
Cuse.
Western
The
because the Bills are
Cuse.
good. The Cuse for
Right.
sure. Well,
I got
it's
an Opendoor fan in the Cuse, and I was
who?
like driving. I was driving in my I got these like Opendoor. We have an Opendoor army, right,
Yeah.
around the world. I'm like always getting these tweets like I'm in Antarctica. I just bought Open shares.
You're like,
I'm in
how?
Nepal and all this. And so a couple of weeks ago, I had to drive my son, my 16-year-old marketing manager, to Yale because he was a part of an IB basketball camp, and we had to drive by the Cuse, right?
Beautiful
And
town.
so, and like I'm at the border in Lewiston, crossing over, right?
Yep.
And I'm like, I'm at the border. I'm about to get on the throughway here, and like this guy tweets at me. I'm in Syracuse. I'll buy you a beer. Exit 38. If you guys want to
Exit
pull over.
38.
Yeah.
That's a deep cut. Wow. Maybe it was Jim Boeheim in a non account. Who knows? Well, it's so fun to have you here today. Obviously, we talk a lot about what's going on and what's trending in the stock market, and love to get deeper dives from people who are really focused on certain topics. So let's dive into Opendoor. Uh, Tell us a little bit about the long position. Tell us about your conviction, and we have some questions also on. Really curious to hear your insights on who you think the next leader of the company should be as well.
Sure. So 3 years ago, I was on the Josh Brown and Michael Batnick podcast, Compounded Friends, and we were talking. So that was June 2022, and when tech was melting down and crypto was melting down, and so we were talking about that, and they were saying like, "Okay, Eric, which stocks are actually going to come back from the dead here?" And name names and all that. And so I mentioned Carvana and I mentioned Opendoor at the time, and they were like, "Oh my God, no way! Those things are like terrible. Like, how could they ever come back? And like, it's impossible." And so we had a conversation about that, and I sort of made my case. Like, they're both, obviously heavily in debt. They're both like going after sort of e-commerceifying kind of two sectors that are kind of stuck in the past. One, used cars, and the going to an auto dealer, to buy your used car with Carvana. They're buying and selling your home using the real estate agents, paying them 6% for the simple task of selling your house, with being Opendoor. And so I said that both eventually we're going to win. Eventually they were like going to be the last man standing in those spaces, and they would turn profitable and they would come back and people would kind of start to believe again. And that was my kind of case. And so the next 6 months, neither of them did anything but continue to go down, and I looked like an idiot. And then finally, like at Carvana eventually bottomed out at $3.50 in December that year after being at a high of 400, and then now they've come all the way back to 400 from 350. So mission accomplished there. But Opendoor did not make the turn, and it continued to kind of like melt like an ice cube. And I looked like an idiot. And occasionally, I get Michael Batnick would tweet at me like, "Amazing call about Carvana, man.
Yeah.
You're the man." And he like, and luckily, like he forgot about the Opendoor call, and so he never said like, "Man, you blew it on Opendoor. What the hell were you thinking?" and all this. And so like eventually, like Opendoor like became a smaller and smaller part of my portfolio, and I'm like, what the hell is going on at this company? Like, why is this
Yeah.
company not making the turn? They had a new CEO. It's this Canadian woman. She was the CFO. Like, obviously, that whatever she was doing was not working. And then you get to the point. I don't know if this has happened with you guys, where you just get so I don't know, embarrassed, angry at holding this position that you obviously got wrong, that you just like sell it, blow it out. I can't
Uh-huh.
I can't I can't take the pain of looking at this thing anymore every day. And you take it from your Yahoo Finance watch list in the top 10, and you put it down like number 300, and you never ever scroll down there. You never,
Yep.
it's like the Walking Dead down there. And so anyway, that was Open Door. And then couple of months ago, or I guess in the spring, after like flailing around in my hedge fund in the last 3 years, trying to figure out, like, trying to find AI models that were gonna, felt like I was like drilling for oil, trying to find like the perfect AI model that I was gonna strike gold with. I realized that, well, one thing we've done pretty well over the years, both like, back when I was just a fundamental only guy, and then since the AI stuff, was like finding these sort of uh, 10x, 50x, 100x kind of companies like Carvana early, getting in them, riding them. Like I was one of the first. I think I was like the only bullish guy pounding the table for Carvana on its comeback from 350 to 400. My AI model flagged it at 11 in May of 23. I didn't believe it at first, and so we took another week to check it, and then a week later they had gone up to 15. I got in at 15, rode it to about 150. Still believed in it at 150, but I figured, like, oh man, after losing money in 21 and 22, I gotta listen to the all the smart people that told me, Eric, take a profit when you have one. God damn it. And so like a 10x seemed like a good profit. And I figured, like, I think this thing is still going to go to 400. I think this thing is going to go back to all-time highs. But I'm so smart. I was the guy who called Carvana. Like, I'm just going to trade it from here, because the thing between 15 and 150, it probably had three drawdowns of like
Hmm.
60% in there. Like this thing goes to 80, and then it pulls back to
Yep.
30, and then it goes to like 110, and it pulls back to 70. Like it's just like part of the game with these kinds of volatile growth stocks. So, but the best laid plans. I'm pretty sure, like, I probably have lost money in trading it since 150, and I kind of learned that with these kinds of like 100 bagger opportunities, you really just the trick is finding them, getting in early, building a big position, and then just sitting on your hands with it, not touching it. Maybe you buy some leaps if you really believe and you really have conviction too. So anyway, I decided, like, hey, we got to do that in the spring, and so let's 100 baggers only from now on. And first two that we came up with were Iron and Cipher. They're both Bitcoin miners that are now making a move into AI and HPC. So you probably have seen TeraWulf take off recently because they signed a deal with Google. Core Scientific got bought by CoreWeave. Iron and Cipher are the same business. They'll eventually do like a TeraWulf type deal. These, I think, both can 100x. But and I put it out there, and people were excited. And I think I used the terminology the next Carvana, and like all of a sudden I noticed like my Twitter followers started to go up, and like people were engaging like the next Carvana. And I remember like 2 years ago, after I got into Carvana, CNBC called me to go on their show, and they wanted me to talk about Tesla because it was like earnings or something.
Yeah.
And I, like, midway through the conversation, I kind of steered it towards AI, and I sort of like shoehorned in like, hey, by the way, my AI model just flagged Carvana, and it's now our top pick, and like we're banging the drum on Carvana, and I don't think I would have found it had I not been using an AI, because I don't think any, like, if I had some snot-nosed analyst working for me with an MBA, I think they would have been too scared to suggest I get into a Carvana.
Mm.
And Scott Wapner was like, come on, Carvana, like this thing is circling the drain, Eric,
Mm.
like, no, we don't want to hear about Carvana. So like nobody wanted to find the next Carvana when it was actually Carvana. But now
Yeah.
that people have seen it happen, like they believe. And so a lot of people started tweeting at me and saying, "Hey, what about Opendoor? You mentioned Opendoor on that podcast 3 years ago." And so like I started to look at it, and then I saw some similarities in terms of where. I mean, first of all, I was shocked because on June 25th, this stock was like 51 cents. And I was
Hmm.
like, holy cow. And they were like facing delisting, and they were going to do
Yeah.
a 50 to 1 23andMe style reverse stock split, which usually spells death. And so, but they also said they were going to be profitable for the first time in like 3 years. So anyway, long story
Yeah.
short, built up position, tweeted out my thesis for it, that it was going to be a 100 bagger from then it was like 70 cents, and then the thing is
Yeah.
like taken on a life of its own.
So you went on the podcast with Batnick and Brown and said you had a conviction. Then, am I hearing correctly? You sold it, and then your AI tool was like, "Wait a minute, this fits the thesis," and you went back in, or did you always stay in?
No, I sold Opendoor probably like last year,
Okay.
and uh, so we build these AI models to kind of flag names like, I don't know, Peloton, Upstart. What are some other darlings from like the COVID era, like Lucid Motors?
Yeah.
Like there's some that just, you look at their charts and they're down like 99%, and then they just like pancake for like
Hmm.
years ever since. And so the question is like, and Carvana was like that kind of, obviously not as, didn't pancake as long, but like eventually like they come back from the dead and they start to erupt and they start this like climb and this ascent. So like, how do you know? So we have some, we built some AI models that can help us detect like when is a stock like that has exhibited this kind of behavior, maybe about to break out. And obviously, nobody knows like day one that this thing is, Carvana is going back to 400. But there are there are models you can build to kind of say, is this going to go from 3 to 10? Is this going to go from 10 to 30? Is this going to go from 30 to 100? That sort of thing. And so, so I'd gotten out of Opendoor, and I hadn't really been looking at it. And even though we had these sort of models like flying in the background, and then people on Twitter or X, whatever, started asking me about it. And that's when I sort of said, okay, let's dig into this, looked at the models, looked at some of the earnings transcripts to, try to get a sense of where the company was at. I obviously knew that like guy like Keith Raboy was like the original guy who wrote the business plan for Opendoor. He's probably the guy who I respect the most in tech as a thinker. And I knew he was out of the company. And so as you kind of build this like model in your mind of like, how could this company come back to life? And like, there's all these like possibilities of like what has to happen. It's probably like 10 things that has to happen for this stock to go from 50 cents to $82 or $500 or even more decision points. But one thing that sure would help would be a Keith Raboy came back on the board. Was in my so I knew things like this, and I put that all into my kind of thought process, thesis, built the position because I did believe like, hey, here's a chance where I only got into Carvana at 15, right? Where Opendoor is now, it's more like getting into Carvana at, I don't know, well, when it was like 80 cents, it was like would be like getting into Carvana at say like $4 or $5.
Yeah, I mean that's wild. And then I want to get into. I mean, you have a academic background in management, which is interesting because you work with these AI models and it's very data driven. It seems, but you also seem to have a lot of insight around what this team or what teams need in certain environments to win. And I'm curious, you think about the next CEO. I believe there's an interim CEO now who's the CTO. The next person coming in, like what traits do they got to have? Like what kind of background? What do you think the style needs to be from this next person in order to be one of those 10 things that goes right and gets them to the next level?
I think I said this a couple of days ago. The best person, if I could wave a magic wand and make this next CEO pick, I'd pick Travis Kalanick from Uber. I think the guy's a killer. I think he's like, there's nobody out there like, not that he's on the beach. He's got this cloud kitchen thing going. But I think Opendoor is a much bigger potential opportunity for him. And I think like he should be interested in the job. He obviously knows Keith Raboy. Keith Raboy is someone I'm lobbying for to return to the board. And he's, one way or the other, I think he's going to have a say on the direction of this company going forward. Um, so why is Travis so awesome? I think Travis is just like, you go back to what he did at Uber. He was just a killer about like going after like attacking the US market first. He obviously had to like go after regulatory just as much as actually building the business, and kind of making the cars work. He dominated the US first. Then he went after international relentlessly. And like there's only a handful of companies, probably less than 5 American companies that have been successful in China. There's like basically Apple and Uber. And now that Travis has sort of was kicked out of the company, they basically have retreated from China. So anyway, like he built an amazing team. And they died for him. They just like bled for Travis and bled for that mission. And that there's not that same kind of founder DNA in Opendoor today. Like it's sort of like become disconnected, I think, since Keith and some of the other original, they call them OGs, left the company from the first 10 years. And I like from if I was Travis, if I'm selling this job to Travis, okay, I'm like, hey, you're doing something with cloud kitchens. Great. I mean, somebody told me it's worth $1 billion now. I guess everything's worth $1 billion now. Fine. Robot delivery food or something like that. I mean, I don't know what exactly what it is. I'm sure it's going to be big. Congrats. There was rumors like he's going to be involved with Pony AI, like this Chinese automated driving thing somewhere, like to bring it over here or something. Okay, whatever. Like if you think about like how many sectors have been Uberified over these last 10 years, okay? Like where you've like it's sort of like Carvana's done it, right? Like Carvana's going to Uberify used cars, right? Uber has obviously Uberified taxis and food delivery and all that kind of stuff. So what's left? Like, and you think about like buying and selling a home. That's a $20 trillion TAM in the United States for the residential real estate market. 14 trillion of that 20 is tied to a mortgage. And so like and usually like 5% of that TAM is like moving every year. So they're buying and selling the homes. They're dealing with this antiquated, agents, 6% process. People want like one click buying and selling. That we've all been conditioned to like expect more immediacy. People want pricing certainty, and so that sector is massive. You add on international, it's multiples of that $20 trillion in TAM. Okay, and it's ripe for Uberification. There should be an Airbnb in real estate. There's no question, right? And so what does that mean? It's somebody who's like this interface between sellers and buyers and doesn't have to take any risk the way that Opendoor has done. Like that's been the knock on the company. Oh, yeah, they do iBuying. You can't make money at iBuying. They buy all these houses and they sit on their balance sheet at inflated prices and then they have to dump them at losses. Doesn't work. Okay, I'm with you. Like, let's get rid of that business. Let's go asset light. Let's go marketplace. Let's be that kind of trusted brand in the middle where consumers come like they do to Airbnb because they want to transact, they want to sell their house. Where are some buyers who, where can I get a like a one-click quote on a price that I'm comfortable with, where I have the assurance that I'm going to see that money wired into my bank account within a matter of days. Like who could be the trusted source to, everyone's talking about Bitcoin and Ethereum treasury companies. I was talking to this guy the other day who was saying, Opendoor could allow any homeowner to basically turn their home into a Bitcoin treasury company. Like we're all familiar with HELOCs. What if you used equity in your home to be able to buy Bitcoin or buy Ethereum? And so like you might, after owning your home for the next 5 years, you turn around to sell it. You might have made more from what you bought in Bitcoin or Ethereum yesterday versus the price appreciation that you're going to get off the home. So like there's these kinds of innovations that are possible. Opendoor is perfectly placed for it relative to like a Rocket Mortgage or Zillow, and so that would be the argument for Travis. And then you got to play to the personal redemption arc, right? Like Travis, you were unfairly thrown out of Uber. That board was stupid. They made a mistake. Bill Gurley was wrong. You were right. That Uber board seriously considered appointing Meg Whitman or who's the guy? Jeff Immelt of GE. They thought those two people were better CEOs than Travis Kalanick to kind of run this company. So yeah, Uber's great. Dara's fine. He's done it. He's a respectable kind of guy, and he's led the company now with their 200 billion market cap. I'd say, Travis, it's time to build Opendoor to be a bigger brand, a bigger market cap than Uber, and finally show those putzes the mistake that they made in driving you out of the company. And to me, that's more important to the guy than money, but he'll make a lot of money.
So I think Eric is really right about a lot of what you just said right there. I think Open Door's salvation is clearly them becoming more of this platform than a flipper. I think that previously in the old world, I think Door's edge was their willingness to put their balance sheet at risk when Zillow walked away from iBuying. Okay, Open Door owned iBuying, but that courage is exactly why Open Door was so fragile in this higher for longer interest rate environment, why it was at 50 cents, for example. And now they're kind of in this no man's zone a bit unless they make some kind of pivot. And they need some kind of leader to make that pivot because it's going to be a 180. Like they need, like if they you mentioned $82 price target. That doesn't come from flipping houses because their business model right now is not scalable. So it comes from rewiring what the company can become in a capital light real estate platform. And that also will maybe invite a legend like Travis to actually be the captain of the ship. Like you want to, I don't know, have some exit the balance sheet risk that's anchoring your stock valuation right now, where maybe syndicate that risk, like you mentioned, to some other institutional partners like REITs. There's a lot of private credit funds that would do it, even home builders, for example. And then Opendoor just earns a fee for the deal flow rather than carrying all the risk to the homes themselves. And there's a real world on monetizing the transactional layer now in real estate in the post AI world, where I think maybe Zillow might be doing this. I haven't looked into that too much, but like, why not just build a marketplace where all the agents, buyers, and sellers treat Opendoor as this kind of rails towards all the kind of ecosystem in the space where there's referral fees, there's mortgage origination, there's titles, there's escrow, all that jazz. There's a lot of dollars being spent going from left to right brain in the ecosystem trying to buy a house. Why not try to put value on that so you don't spread it on just a regular house? You just take a take rate for every service that's orbiting around the transaction. So I think that right now, you guys hear me talk about this on the show all the time. Data is the new moat. It's going to become a commodity, but whoever creates these kind of rails to monetize the transactional layer across all this data will do well in the new digital economy. And right now, I think there's an opportune time, like what Eric's doing, is creating a retail premium on a brand in a commoditized space. And that's valuable because they can leverage that. If they go asset light, they have a big following on retail eyeballs. And there's like, I hate the word cult because it's got a negative tone to it, but cult mean fanship. That's another word for fanship. Cult doesn't have to be a bad thing. If there's fanship behind a brand, people will be more willing to sell using Opendoor because of loyalty, brand loyalty. And there's somewhat of a capitalization that the company can do on that, where we could be asset light. We have a great brand following. We can turn into a verb, for example. And now all of a sudden, we are the go-to real estate platform. So I think there's ways where this could really work. I just don't know. Corporate governance is an issue for me. I don't think they have the cojones maybe to make that kind of pivots. I don't know, but you know this way more than me, Eric, on that space. But that's kind of, I come from the corporate strategy world, so like I deal with like wearing that kind of hat. But that's the way I would play Opendoor completely if I was going to be an activist of some sort.
Well, I think that the advantage that I have in this campaign, if you want to call it that, and with our open army behind us in the retail versus I lived through like basically 10 years of fruitless activist activity at Yahoo. First with Terry Semmel, then like Jerry Yang, and Scott Thompson, Carol Bartz, and then Marissa Mayer, brought in by the smart money. Dan Loeb brought in Marissa Mayer. Remember, like let the record show, and she drove it in the ground, sold it to a phone company. Anyway, the difference between that campaign and this one is that that campaign, the board was always able to say, "Oh, don't listen to Eric. He's just a little guy. He's just like a noisy shareholder. He doesn't have the long-term view that we do in the board. Of course we're driving the company into the crapper, but just give us 5 more years. We need more time to drive this thing, even like subterranean. We gotta go deep before we master the comeback. It's all part of the plan. We got to destroy the company, and then it's part of the 10-year plan here, guys. Anyway, now that because I've sort of aligned and locked horns with Keith, you can't argue that the founders are idiots. You can't argue that the founder DNA was stupid, and you, the managerial class, are all knowing and all seeing and brilliant. So I think that's part of the reason why they've been so silent, is they really don't know what to say. So we'll see. I mean, I totally agree with you, Shay. I mean, that's definitely the playbook. That's definitely the opportunity. There is like one other like really interesting thing, which I sort of since come to realize since putting out my initial $82 target, which is that initially I was thinking, like, okay, they got to keep iBuying, but they got to build a platform. Like Carvana doesn't make money from selling cars; they make money from finance and insurance, right? And then they make money from like all the ancillary services that they can sell around that. And they're not making software margins, but they're making, now they're making I think 20% EBITDA margins or something like that. So yeah, maybe. And like when I built my model, I was like, okay, well, they'll sell houses in iBuying, they'll scratch out a little bit of gross margin, the single digits or something, but then they get a mortgage and title, maybe they make a little on the reno and stuff like that, and then they can get it up to like a 20% gross margin, huge market, 1 or 2, 3, 4, 5% of national market share. It works, right? And then the thing that went into the $82 price target was like, if you looked at Carvana, like you can't value the thing on an EV to EBITDA basis because there's no EBITDA. There wasn't EBITDA, and like, because these are like money losing companies transitioning to money making companies, and that's part of the reason why they re-rate so dramatically, and that's the opportunity available to you. So if you have to look at price to sales, and you can't look at rear view mirror price to sales, you got to look forward price to sales. And so for Carvana in 2020, when we're still living in the COVID bubble, and they were like $400 a share, they were trading at like 6 times forward price to sales. By June 22, when I'm doing the Batnick and Brown podcast, they're at 0.5% forward price to sales. Carvana is. Now they've come back to 400. They're at, I think, 4.5 times forward price to sales. I mean, I think got as high as 5 times forward price to sales. Opendoor went from 7 times price forward sales down to 0.1x at the low at 50 cents to I think even now they've rallied back to like 330 or whatever they are now, and they're I think they're only 0.5x. So if they go back by like 2028, 3 years out, if this was my calculation, you take the Bloomberg consensus number for 29 forward, that's 12 billion. You apply like a 5x forward multiple, you get to $82 a share. That's how I got it. But now, Shay, since like talking to people, there's even a quicker path with if they fully embrace if they could jettison iBuying altogether today from a standing start today. They could fully embrace this like asset light approach, and next year 12 months from now, they could have 1.3 billion free cash flow in 26. And how is that possible? Every year right now, and it's going to grow, but every year they get 1.5 million sellers coming to their site requesting a quote. Okay. And that's the mother's milk here. That's something that Zillow doesn't have. Zillow gets buyers. Okay. Zillow, and then if buyers sees, oh, I see a house in Hilton Head. I want to see how much is this at? Oh, you talk to a realtor in Hilton Head. Okay. Rocket has people looking for a plain vanilla mortgage. They don't have sellers coming to them. Opendoor has sellers. And that's as important as people going to Google and searching. That's where all the revenue stems from, is the sellers. And today, so if they monetize just a fraction of those 1.5 million sellers, convert them, I think it's like I forget the math, 10% or something like that, and then they get like 2% take rate on that. That's 1.3 billion in free cash flow next year. Free cash flow, not gross margins. Free cash flow. Okay, so that's the opportunity. You put today the Carvana trades at 29 times forward free cash flow for next year. So, basically, Opendoor could match what Carvana is going to do in free cash flow next year if this board got off their ass and actually followed this strategy right now. 12 months from now, 1.3 billion in free cash flow. And so that means today, not next year, today, basically on that 29 times forward free cash flow, this should be a $58 stock, not a $3 stock. So the opportunity is there. They just got to get off their butts and do it.
To add more layers to what Eric's saying as well, like you guys all see what's happening on Reddit, for example. Reddit was it's totally different industry, but data is the fuel for the AI engine. Seller data, Opendoor, boom.
Yeah.
Do you know how valuable that sentiment data is to monetize and license? That's exactly why Reddit's been catching such a bid in the post-AI era, where the best sentiment data on social media is through Reddit. There's no BS, there's no ads, etc. Seller sentiment data, how much money is being spent on the real estate industry every year? Just monetizing 1% of that on, let's see how things are happening in seller, what locations are potential bottlenecks on inventory. I'm in private equity fund, like maybe we're going to pay for this annual license or buy this license on through Opendoor's platform, which again, that would be software margins, guys. We're talking 70% plus. That right there is what they should be doing. And I think that people like, I get the comparison to Carvana because the opportunity is similar, where they go from bleeding cash to all of a sudden 20% EBITDA margins, but like it's different in the way this only works as being the next Carvana is if they actually remove iBuying, because flipping cars is very different than flipping houses. Like cars, you can mark them down, you can move them quickly, it can turn to cash within it's instantly. That velocity gave them the ability to restructure the debt that was required, and all of a sudden go from losing money every year to now they're growing top line 20 something percent with mid-teens to 20% EBITDA margins. You can't do that in real estate. You just can't, because property is dead weight costs. You got the debt associated with it, the taxes, maintenance. Like it's a balance sheet killer. And at the end of the day, you won't get a good valuation or multiple when you have that ugly of a balance sheet. But they freaking have the data moat. It's right there. Why not just monetize it? You're seeing so many optionalities in different industries on like them names just getting re-rated aggressively because they have so much data in their ecosystem. It's just a no-brainer.
And like again, like when this whole open army started to grow, like we're all hive minding like these ideas about like how does this company unlock value, which is the amazing part about participating with all these other like-minded retail investors. And it just shows you the power of like ownership versus like these like I really wonder what these 1,407 people are doing all day every day at Opendoor. That's the head count over there, because like we're just out here in the trenches fighting, talking about ideas, and we're coming up with this plan for $500 that we're trying to manifest now, and these great ideas. And so like I remember like early on, one guy was like, we got to partner with Palantir, we got all this real estate data, or OpenAI, or Grok, imagine that if we just unlock this. And so I was like, yeah, I'm down with that. And then I got introduced to this guy John Chu, who's like a venture capitalist for Coastal Ventures. So it's the same firm that works for Keith Raboy works for. And but John, I never met the guy. We just like DM each other and stuff. He's in Seattle, and his first job out of college was working at Palantir, basically building the Foundry, product. And then his second job was working at Opendoor. So the guy knows a thing or two about this issue. And I was like, John, like, what do you think? Should they partner with Grok and Palantir? Like they got sitting on this gold mine of data, just like you're saying, Shay. And he's like, well, here's the honest truth, Eric. Okay, like they had some amazing AI people, machine learning people, like when I was there. We're talking like before 2020. Okay, it's like the last 3-4 years there, like amazing. But like basically anybody who was like brilliant in AI is now working at either OpenAI or Meta. And so like they're not that, the people that are left, they're good. They're good. I mean, they're like, solid, but like you got to build that up again. But you don't need to partner with Palantir. Why would you give up the economics? The data, you got all the data, but you need, you either he's like, you need a guy like me, or you need somebody that I would recommend to kind of go in there and like build a team. I was like, wow, yeah, really, that makes sense. We keep all the economics for ourselves. Yeah, why give up half to Palantir? Like, well, like, how long would that take though to build a team? If it, I could do it in 3 months. So like, I mean, let's go. I mean, what the hell are we doing?
Yeah.
What are these 1,400 people doing over there?
Eric, let me ask you this, because I know activists, it's tricky. It's based on cap table voting shares, etc. What's the Opendoor situation like on a potential like their flexibility, or is there like it's very top heavy on the funnel where a couple people just own a ton and you have to persuade them and they're unpersuadable?
No, it's not a controlled company. This isn't like Zuckerberg that he has like all control. Um, uh, I mean, that's the other disgusting thing about this Shay. Okay, like this board didn't. We're sitting here today. We're like, yeah, these guys could be like the Airbnb for real estate. It's amazing. This board sat around while this thing died on the vine to 51 cents, June 25th. That's a $371 million market cap, Shay. Okay, and I bet you if the people at Rocket in Detroit had a brain, they would have come in and scooped this thing up at 80 cents. And the Opendoor board, I'm positive, would have signed off on that deal. And then they would have said, that was a rough one. Boy, we were left a mess in 2022. That stupid founder, he bought all those homes. Thank God we were there to pick up the pieces. And yeah, it wasn't the outcome we wanted. Our all-time high was $39, but 80 cents, like who could have done better than us? I am positive 100%. That's what they were going to, they would have said that. And nobody on CNBC would have covered it. Nobody in the Wall Street Journal. It would have like been done in the dead of night, like the Baltimore, Baltimore Colts moving to Indianapolis or something like this.
Mm.
And no one would have said anything. And we would never would have known that that was the night that the Airbnb of real estate died. But we're not going to let that happen. The open army is here. We've identified the value, and we're like a dog on a bone, and we're going to make sure that this board does right. So they don't have any power, basically, Shay. Like there's no like controlling shareholder here. Eventually, there's going to be a shareholder vote, and these directors can be voted off one by one. And you don't think that Vanguard and BlackRock, which are I think are the two biggest institutional holders, or all these pension funds who like all talk about corporate governance, you don't think they're going to look at this mess and see like the uprising of the retail shareholders and just the sense that we're talking? And how do you argue against sense?
Yeah.
It just like they're gonna get they'll get voted off. So I but before it comes to that, I'm sure they're gonna like agree to like whatever Keith suggests whenever he comes forward.
Eric, the management team, you have a lot of ideas for them and opinions. Do they take your calls? Are you in touch with them in any regard, or are they not taking your calls?
I haven't had any calls with anybody. Carrie never called or emailed or messaged. I've had DMs from Shrisha, who's like the interim CEO now. He was the CTO. And
Okay.
I've had DMs with a guy named Yang, who's like sort of like their AI ML guy,
Interesting.
who's like very smart.
Going down in
So
the DM. That seems wild to me. Not
and,
even
and
in
I've
the
I've, I've,
email.
D, I've DM'd and with a couple of the directors too.
Okay.
One got a little heated.
Okay.
Poyo,
Release the
like
DMs.
he's screenshotted without my permission some of our DMs to kind of
Oh.
make himself look smart. And he took a shot at me, and so then I just screenshotted everything, and I
Oh
sort
no.
of blew him out of the water.
Wild.
But now we've sort of made up. And
Okay.
then Adam Bain is the other guy. He's the former
Yeah.
head of sales for Twitter. He's on the
Yeah.
board. So
Okay, interesting. And then zooming out a bit, and then I want to talk about some of the other companies you mentioned at the top. But with Opendoor, what do you think about what's outside of this company's control? So you mentioned jettisoning iBuying makes sense, but obviously we're probably going to move into a lower interest rate environment. But we're in this weird, this Shy and I talk about this a lot. We're millennials. Like our generation, like is not buying houses, can't buy houses, don't have the means. You have a whole generation sitting on the real estate. Seems to work in your favor, right? You got a lot of desperate people that are like need to sell their
yeah,
houses to retire.
yeah, yeah.
How do you think about that opportunity and like the pressures in the market though, not on the seller side, because it seems like you got a lock on that, but on the buyer side of people having the capital to actually buy these homes?
That's a great question, Katie. And this is like another huge opportunity for this company. They can put themselves at the middle of this, and it goes from being this like niche business issue to like front and center. Donald Trump cares about this Donald versus Zoran Mondami issue, and let me explain why. Because what you're talking about, Katie, is U.S. home affordability. How do we drive it down? Because everybody like goes on. All the politicians go on TV and they talk about, oh, it's so hard and cost of living, blah blah blah. Well, obviously, like the biggest part of cost of living is buying a home, and we all know the story that you just talked about. And so, what's the single biggest lever that Trump or Bill Pulte specifically, who's the guy in charge of this, could pull to dramatically lower U.S. home affordability without causing inflation? And that is something called assumable mortgages. So assumable mortgages today are available to you if you're in the VA system. You can, if you got a 2% mortgage in 2021 for 30 years, congratulations. You want to move from Texas to Georgia, you can port that 2% mortgage with you. You don't have to sell your house in Texas and then sign up for a 7% mortgage in Georgia.
Mm.
It's assumable. It travels with you. So what Pulte could do, Bill Pulte, Pulte Homes, he knows a thing or two about homes. He could make these assumable mortgages available for 100% of all mortgages, that $14 trillion in TAM market. And so what that would do is it basically unfreezes the US home housing market. It allows it suddenly people can take that mortgage with them, non-inflationary because they've already got it. So they're not getting like a bump there, but they are now there are more bidders for those homes in California, or those homes in Georgia, wherever, South Carolina, whereas there weren't before. And then the whole system gets unstuck. And then there's like all the downstream revenue that goes to the agents and the home renovation folks and everything else that goes with the housing market. So it's a it's a no-brainer. Keith Raboy is obviously very conservative. His husband is actually in the Trump administration, and obviously, there's a lot of other people kind of connected to him that are very close to the Trump administration. Travis is like former like head of sales at Uber, works in the Trump administration. Emil Michael. So anyway, like there's lots of ways to get to the right people in this administration, and the pitch to them would be like, the whole only reason why New York City has lost its mind and are going to elect this crazy communist that never has worked a day in his life, to have these like government run grocery stores, is because people are frustrated with the cost of living. So what's our answer? We got, on the
Yeah.
conservative side, we got to have an answer. And so this is like a tangible answer. It's something, he's tweeting about all the time at 4 a.m. So why not?
Yeah, when I think about like when there's political factors into play, my brain always goes to like who loses if this happens, right? If the home buyers are benefiting in the housing market, who loses, and are those people powerful enough to influence? Do you know, like in that situation, like who gets screwed by that?
I think it's only the banks,
Okay.
and so screw them. Let's shove it down their throats. And I'm sure like Trump wouldn't lose any sleep doing, screwing them over.
Yeah,
So
he's taken some shots at the banks, so I feel like that's no love lost there. Interesting. Well, let's quickly talk about Drake, and then let's get
Yeah.
into some of the other things. Where did this begin? For people who haven't been following, you have a tongue-in-cheek campaign, but at first I thought it was tongue-in-cheek, and I'm like, no, this guy is dead serious. Wanting to get Drake to own at least one share of Opendoor. I mean, you could probably hire him for a marketing campaign if you crowdfunded that. But why is this so sticky with retail investors? This meme. Every time I look at your feed, just more and more gifs of Drake that I've never seen before in my life.
Well, I mean, like you said, like I'm in Toronto, right? So like I'm obviously, everybody in Toronto is very appreciative of Drake. We're totally team Drake relative to Kendrick, sorry, in this beef. And he really put Toronto on the map. He really showed that, Toronto, like in Canada in general, like we're always like the kid brother to the United States, and always, a lot of Canadians very insecure. They always like try to puff themselves up. We're world class. But deep down, they feel like they're nobodies, up here in the frozen tundra and stuff. And Drake really came along and really showed like, you can be a hardworking kid, and like totally out of the blue. Nobody expected this kid from Degrassi Street to suddenly become this like worldwide phenomenon. And so it makes Toronto folks feel proud. And he happens to live like I was saying, like a dog walk away from where I live. So obviously, like you drive my kids past his house all the time. I was just like tweeting a few weeks ago, like the guy just put a payphone in front of his house. Like, what's up with this? Is there like and yeah, seriously, I was like, is there a new track coming out? Like, or is this like just like basically is it like is this? And he built a sidewalk from the street. And I was like, can I stop here? And could I go up
Have
and
you
like
seen anyone use it?
No. Usually, I think he's on tour now. Somebody told me he's in Sweden. He played a
Okay.
concert last night in Stockholm, and so usually when you drive by, he's got like an army of security guards out front, like protecting things. But luckily, like I guess he's touring. So anyway, I have a 16-year-old son. I've got 4 kids. I got a 16-year-old son, Julian, who's I've appointed my marketing manager at EMJ Capital, and so he like feeds me ideas. Like somebody like texted me out of the blue the other day, like, hey, I'm on TikTok. I want to do a TikTok live interview with you. And I was like, Julian, I don't know who the hell this guy is. Like, can you vet him? And so he's like, yeah, okay, he's good. He's good. You can talk to this guy.
You got a better vetting resource than many brands, I would say. If brands should hire a teenager just to gut check these people.
So he was like, why don't you just like go in front of his house and like, but you got to do it day after day, Dad. He said. You're like, don't do it one and done. You're like, you got to be committed. Like, and that would get people interested. So we sort of workshopped it. And yesterday he got home. He's like trained. He wants to get a D1 offer. Play basketball and stuff. So he came home from training, showered, and was like, hey, you free now, man? And I was like, oh yeah, let's go. We just hopped in the car, we drove over,
what is the
and
security
filmed it.
team? Do you like know them by name now? They're like, oh hey Eric, like, or are they like,
Nobody was there yesterday. It was like open.
whoa,
I was like, okay, Julian, let's go. Come on, like get it on whatever, like the right mode, and like to start filming. And he was like, yeah, but like I don't want to get run over. I'm in the street here. Like I just film. Just get it going. So it was only like 11 seconds, but I think it's now past 300,000 views so far. So
oh my god,
I
that's
don't know what the
crazy.
stock's doing today, but we got
Hey,
to
you know
we got to
what?
go back
Super
today.
Bowl ad, you get Drake, costs you a pretty penny, but I can see it. I can really see it. If not, you can always get some open in
Well, I
bonuses
hear
for 29.
I hear he loses money on sports bets. So like my goal
Yes.
is like Drake, come on, why don't mess around with these like parlays? Like why don't you just put your money in a 100x stock, like
Yeah.
open, just like your business manager will thank me later. I
Yeah.
mean, like not that you need a bigger mansion, but come on, like it's teach the kids like how important this is. So we'll see.
Amazing.
Question for you, Eric. I know you mentioned this name earlier. Iron. I think for me, I'm a TradFi guy, clearly, but I'm very green in the crypto space, learning more about it when I have my free time. I think crypto miners is very interesting because they're pigeonholed as crypto, crypto, crypto. When right now AI workloads are exceeding all expectations, like AI infrastructure spend is just through the roof, and every 3 months we're getting more and more numbers of like it's demand's on fire. There's not enough supply, and we're already seeing signs of it, but eventually it's just gonna be such a head against the wall moment where we have to look for alternative solutions to fulfill all this demand. And I think miners are interesting where they have cheap power, they have massive facilities and racks of GPUs that were originally for crypto mining, but can easily be pivoted towards AI computes, where
Yeah.
power, not coins, is now going to become the true currency in the new digital economy. So I have five names I'm watching, but clearly you said Iron. I'm curious on why Iron versus like the Galaxy Digitals, the Hut 8s, Riot platforms, etc.
Um, the answer is that I agree with you about your thesis. I would just say it's not about converting the existing like Bitcoin mining servers into AI and HPC servers, but it's using the knowledge that they have from building those kinds of like servers. They're going to still mine, right? Until like we hit like the ceiling one day or whatever, slow down towards the ceiling of 21 million Bitcoin. They're making money from that, but they've used their knowledge of how to build those servers to now basically try to get out ahead of this huge need that's coming. It's going to hit us in the face probably starting next year. Of like we're just short on these kinds of data centers that have connections to like fixed cost, like secure, like low priced power, in big enough demands. And so my quick thesis on why Iron and Cipher is that these two names saw this, years ago, started the pivot, and they basically started buying the land, um, negotiating the power connections with the local, energy provider, electricity provider at really low rates, and building out like each of them within the next 12 to 18 months will energize um, 3 gigawatts each of like AI data centers, and that's huge relative to all these other names. Now, I do like Hut 8. I'm friends with Asher, and so I don't have a long position with them with them yet, but I really sort of getting up to speed on their story and like really think that they have some interesting plans as well. But the first two out of the chute that I liked the most were Iron and Cypher. I think basically like we're going to move from where these guys and all these other names that you mentioned, they're going to get valued like more on the price, like the movements of Bitcoin, which is what sort of happens today with them and how they move as miners. But they're going to be judged by like a multiple of future gigawatts that they're going to light up in the next 12 to 18 months. I think is basically going to become the metric, and because those things are just going to go up massively in value. I think all these players like Google, and they did this deal with TeraWulf recently, but there'll be like probably Oracle is the one that I have my eyes on the most. It would not surprise me if the Oracle with Project Stargate with OpenAI announced the big deal with Iron because they're building in West Texas, not far away from like where Oracle's doing stuff in Abilene, and they've got to like they're going to be Iron's going to be the first to light up their 3 gigawatts, probably in the next 12 months. Cypher's going to get there too, but going to take them probably 6 months longer. So I think both will do well, and both won't get like 40% up re-ratings like the next day the way that TeraWolf did. I think both of those when they announced their deals, like they could, it could be even more. Now they're also like Iron's sort of playing in this space of also buying Blackwell chips themselves. And so they might end up becoming like a CoreWeave, as well. And it's kind of interesting because CoreWeave went public, basically owning no land, no power connects, and they try to argue that was smart of them, but they're essentially like middleware. And then I think part of the reason why the stock sold off recently is because they realized they were kind of screwed, in the long run. And that's why they had to do the deal with Core Scientific. And so they did that deal, but it sort of like showed to the market kind of like their sort of inherent weakness. And in terms of like gigawatts in the can, Core Scientific is like nowhere near Iron and Cipher. So anyway, it would not surprise me if we like came back 3 years from now and like everybody thinks CoreWeave is kind of like the next big thing in AI, but it turns out that Iron sort of disrupted them from the underbelly, basically from the ground up, literally, building the data centers from the land that they bought and built themselves. So 100 baggers, they've only 2x since I first started talking about them in May, June, but I think way more to come with both.
No, I mean, I think when I was looking into it, Iron stuck out to me because their power costs it's so much lower than the alternative comps out there, and they already have some AI revenue. I think, don't quote me, I think it's like 30 million run rates, and
Mhm.
that's at 90% gross margin. So I think it's interesting because right now they're trading at 11 times earnings or maybe 12 times. I think they're getting penalized for being a crypto miner, and that's a commodity of a space. Like, why not make that full pivot, go all in on the AI part of their business, and do the core
I'll tell you
narrative
why.
change?
I'll tell you why. Their fixed cost for mining a Bitcoin, their all-in cost is 41,000. So
Uh,
at current prices, they're making free cash flow of about, I think, $800 million a year, which they are funneling directly into that AI HPC business. And so what happens if BTC goes to 250, 300? Suddenly, like now, $1.5 billion free cash flow, 2 billion in free cash flow, just from their existing operations. So it's like, to me, it's like a no-brainer. Like, why not just like uh just it's free money. It's like
w-
this money's coming out and just buy more Blackwell chips, disrupt core wheat faster, like it's to me, that's why.
is that's surprising then on why it's trading at such a low multiple? Is it because
Yeah.
like are they getting penalized for that convertible? I when I looked into them, I think it was like 500 million convertible they raised recently at a really good rate. I think it was like less than 5%. Like so,
I think it is, Shay. I think it's like um it's an opportunity. Like this is like there's a lot of, I mean, those Iron and I think Cypher, they were both, I think, SPAC names, or at least they IPO'd in the same like SPAC era of 21, right? And like there's just so many of these public stocks that get tossed in the trash bin, and people are just walk by them every day. They just assume they're like a homeless person or something. They just like, oh, that's a homeless person. I'm just not gonna look at them. That's what sort of happens with these stocks, and they don't do the work. And I've had people say to me, like I've had hedge fund managers say this to me. I've had like VC say to me, like, if this business was private, like we'd all be sitting around a room with like it wouldn't be like, you know, $500 million stock. We would market at 5 billion, and we'd all agree like that's the right mark for it. And yet, like when it's a public stock, it's just like it's an untouchable. And
I love that you said that because that's why I think the IPO market is getting a little stalled because the narrative is so easy to control in the private market, and perception is everything on a valuation of a company. In the
right.
public market, scrutiny is just open, pick holes at whatever you want to pick holes at. Uh, Comps are much easier to do where you don't control the narrative; it's out of your control, and I think that's why you're kind of seeing a lot of these like Databricks at $100 billion. You're seeing OpenAI at $500 billion. If they had, sorry to be crass, but open their legs and show the world like what's actually there, they might not be able to control the narrative of why they're worth this much. So I do think that why not, if you're a PE firm, acquire Iron, take them private, couple years, do some work under the hood as Bitcoin goes up in price, as AI workloads hit that wall, and rebrand that whole thing. Like, that's an interesting PE move.
But we're all here for the retail investors, right? I mean, that's who's watching
True.
this stream, right? Like, and so like, I think it's all goodness for the retail folks. It's basically like, hey, like, let these, let the dummies on Wall Street walk by it. Of course, these sell side analysts for Opendoor only have like a $1 or $2 price target. Nobody's going to stick their necks out and say my price target's $82. It takes balls to do that. It takes and it takes a retail investor who's got skin in the game to go down the rabbit hole in these names and find the gold, and then come up and shout from the rooftops that you found it, and anybody can do it. I mean, after I came out with my Opendoor thesis, I like somebody said, oh, did you know that somebody on Wall Street Bets in May came out and basically said Opendoor was going to be the next Carvana and 100x and stuff, and I was like, oh no, I hope he doesn't think I ripped him off. And I went back and I read it, and then of course you can't tell who this person is. It's just like Greg W134 on Wall Street Bets. And I joined a Discord server that called Data Door, where they were 1,200 crazy people that were obsessed about Opendoor at 51 cents. And I was like, hey, has anybody heard of this guy? And I was like, oh yeah, that's Greg. Yeah, he's here. Send him a message. I was like, oh, great. And I send a DM to Greg on Discord server, hey man, I think I agree with you. You want to swap notes or something? And he's like, I check in the next day, yeah, sure. Hey, I saw your thesis, and we started exchanging notes. And I'm like, who are you, man? And are you in Japan, or are you 20 or and he's a little guarded at first, and then gradually he sort of the veil comes down. Turns out he's in Silicon Valley, ex Apple, ex Google. Now he's got a startup of his own. I think it's doing search stuff, and he joined Twitter or X, and I promoted him and stuff, and now he's got all these famous people following him, and he's a bright guy. He's super bright. I mean, I honestly didn't see his thesis before. It was great, but that's the opportunity. You could be whoever, some guy in Sudan, and if you got a thesis that makes sense. I mean, the world's going to beat a path to your door with the way social media is today. So just go for it, and dumpster dive, and find some, tell me why Lucid is going to become a $200 stock again, and I'm all ears. So I want to hear about it.
Yeah. Eric, before we let you go, we've been talking on the positive things you believe in, but when you talk about dumpster diving, when you walk by a trash can, how do you know what to reach in and grab, and how do you know what is definitely trash? And are there any companies you're shorting right now that you want to shout out, perhaps?
No, I'm not really shorting. I sort of decided in the spring, when I said, hey, we're going all in on 100x ideas. It's more like a Warren Buffett idea. It's hey, hey, yeah, we'll probably trade, in the future, but basically we want to have 8 core long names that we believe in, and we might trade around some of those names. We have some ideas around doing our own Bitcoin and Ethereum treasury company, and we think one of the things that we can do differently and better than all these other monkeys where we raise money, we buy Bitcoin, we raise money, we buy Bitcoin. To me, that's a boring model. But to have AI models helping you determine when to buy and when to hedge and all that kind of stuff, and I think that's a much more interesting approach. But in general, I'm not looking to be a Hindenburg, and trash a company and say why it's going to go to $40 from $180 and all this kind of stuff. I'd rather it's more of a VC power law kind of model applied to public markets. Let's find these names that we think can 100x over the next few years. We won't be right about all of them, but hopefully we're right about 2 or 3 or 4 of them, and that will make us for life.
Love that. Love that model. It's probably more fun to be like dumping on companies, but to your point, you have a thesis and you're operating with it. And hey, man, we really hope the Drake thing works out, and also that you don't get arrested standing outside of his house every day. That would just be tragic
No,
if
I'll
one of
try
the
not to.
Canadian mountain men came over.
My wife was like very worried when I told her I did this yesterday. She's like, "What? You're gonna get arrested? You're not allowed to show his number." I'm like, "Honey, Kendrick put his house on his
Yeah,
album
we
cover.
saw
I
the
think
Google map
everybody knows
address.
where he lives." Okay.
Well, we appreciate you coming on. We know you're busy. And again, we have Eric Jackson here, founder, president, portfolio manager at EMJ Capital. Follow him on Twitter. Follow Greg. Find
Yes.
Greg on Twitter.
Greg W134.
Okay. Oh, that was really his name?
That's his
What-
Twitter
I
name.
thought you
That's
were
his
just
username.
making up a fake
No,
name.
What-
It's so specific.
Perfect.
It sticks in my mind the way $82 sticks in my mind.
Was the username taken of the two, like 134?
Yeah.
There's a Greg W133 and a Greg W135.
Let's get those
snuck
guys
in there.
together. The Greg meetup. All right. Well, thank you again. Very awesome to hear from you. And Shay and I'll be back tomorrow to talk more of the earnings that rolled in today and everything else that's going down in the markets. And see you guys tomorrow, bright and early, 9 a.m. Eastern.
Thanks, guys.